I screwed up the audio on this episode and had to substitute our guest voice with artificial intelligence due to too much interference from audio reverb. We've also got subtitles, but I think you'll enjoy this episode regardless.
It's only entertainment.
Welcome back to the Talking Hedge. I'm Josh Kincaid, capital markets analyst and host of your Cannabis Business Podcast. All right, today we've got Norm Ives, cannabis wholesale insurance broker with Amwins. Norm is a wholesale insurance broker specializing in custom insurance products and risk management for the cannabis industry. He serves as a cannabis practice leader at NutriRisk, a division of Amwins, and is a member of the board of directors for the Cannabis Alliance. Norm, thanks for being back on the Talking Hedge.
Thanks for having me. Pleasure to be here.
I think the last time you were on the podcast was 2019, April 20th. You were rolling shotgun. We were driving. We went to 20 stores on 420. And in between stores, I was busting out some questions talking about insurance and how that might impact the industry. And here we are. We're going to get to regulations and what rescheduling might look like. But in the meantime, let's try to cover some ground. So, Norm, we hear about crop insurance for traditional agriculture. And so maybe you could share some insights in the types of insurance coverage that's crucial for cannabis businesses specifically and how they differ from traditional industries. We'll start with that baseline.
Cannabis insurance market is a little fragmented, frankly. It's underserved from a participant standpoint. So if you're a campus business owner, you're not going to Farmers or State Farm or any of the traditional insurance areas. That's all placed through the XXS or Plus Lines market. Where you think of traditional hard-to-place places like a crane operator or somebody, you may have to go to a Lloyd's and Walmart. It's not the same markets that we're engaging on cannabis side of the world, specifically on crop insurance. There's very limited availability of crop insurance out there along with a number of the other lines of insurance because we're dealing with the excess insurance lines market buying your coverages as power cards. So a lot of small business, Amory American, or even mid-market business in the US, you'll be able to go out and buy a robust package of coverages that cover your business, that cover property and casualty, and all these different aspects of risk that you're physically exposed to within the cannabis insurance market. That's not the case. You're buying those coverages out of our card in a lot. I'm not really sure on the backside of insurance where AI can have an impact. As far as on the underwriting and the risk management side of things, where I see an immediate impact is more on the selling of insurance services and communicating the value of different products to the participants in a competitive industry. If you realize the process that these business owners are going through to purchase their insurance, it's a challenge for somebody who is steeped in this niche, understanding what they want, of what business owners want to deal with, and how to meet your marketable needs. I think being able to fit in is, I'm going to steal your phrase, words matter, and in the insurance world, cannabis is a tough industry to work because there's not a lot of standardization. We have created an environment where every state is its own little ecosystem and its own little environment of rules and regulations, and they all evolved on their own. And because of that, there isn't necessarily a common terminology within the industry. I mean, one man's was in another man's resin. Or is it resin? Is it solvent-free extract? Or is it solvent-less extract? And the nuances of the details of the operation of the industry is sometimes hard to get to. And I guess that's where I look at ChatGPT or some of these AI options of, I think it can help bridge that gap between the cannabis industry and the business insurance world and trying to understand what these risks are that we're evaluating and helping the consumer, the business owner, buy the coverages that they're interested in securing. Okay, I mean the industry from an insurance standpoint. The insurance industry is still underserving, in my opinion, the cannabis community. Until we get some clearance around the county and the federal prohibition, it's going to continue to be an undermarket. I mean, currently we don't even have Lloyd's in London, the largest BNS carrier. I mean, you think hard to place risk. You think risky endeavor in the insurance world. You think going overseas to London is secure coverage. And I mean, that's a big hole in the market. So what you have now is you have a few insurance companies participating. But by and large, the majority of the insurance companies, they're MTAS, the managing general agents. It's a bunch of underwriters got together and said, hey, I understand this niche. Let's go find an insurance company to stand behind us and we need to create a program. And so while the insurance company is standing behind them, providing security to the policyholder, it's really on those underwriters to create a program of insurance that the people in line, that the business owners line. To this point, those guys are not making a big effort to have to ban alcohol. Really, it's been more of a re-bottom-up, a re-edition of bad judge reporting.
How's the federal legalization or the rescheduling, if cannabis does get to a Schedule 3, that's obviously going to change. So let's assume that it does go down that path. What's the impact to the industry?
I think it really depends on what does that look like. I mean,
When we talk about Schedule 3, we're talking about moving cannabis into a more medically accessible environment, and there being a larger organization around it. Those definitely become easier to ensure once you remove the barriers as well as federal prohibition. As a Schedule 1 drug, it's problematic. Just like a business owner does, we have some unique business operating environments within the insurance world based on just the fact that the Schedule 1 substance is treated differently. So, when we look going to Schedule 3, I guess my question is, what does Schedule 3 look like? I think from the air mount for the medical industry, is there still a record of cannabis over? Is it a hard doubt? And what does it look like? Because in my mind, if you think about the money that these states are getting from the tax revenues that are being generated off cannabis, I can't imagine too many senators being comfortable going back to their home state if they approve a program that just siphons off hundreds of millions, if not $1 billion from the state budget, around camp legalization. So it's curious to wonder what that's going to look like. Gonna be at a car park, recreational car park.
I would think that there will not be a carve out. They won't make a special, and I'm hoping I'm wrong on this, by the way, but I don't think so. I think if you follow the money, unfortunately, what we'll see is the sales tax of cannabis by Pfizer or whoever will more than substitute what retail shops are doing now. And the lobbyist money to local places like Olympia, Washington, or your local municipality will see way more than the cannabis industry ever did for obvious reasons. Hopefully I'm wrong, but if maybe let's have a baseline, Norm. Tell us about the common types of cannabis claims in businesses now, what you see, and then what types of insurance services that we might be able to expect if it goes straight medical.
Most common claims that we're seeing right now are predominantly property claims. You're seeing fires at indoor groves. You're seeing wildfire risks.
Sorry to cut you up, but is that the common outcome? Is it's an act of God? It's not arson?
No, I would say in my experience, probably the more common event is a lighting issue leading to a fire. That row is probably the one that I personally have seen more often than not, or some sort of electrical issue. One of the large planes I was personally a part of as an agent was a large row down in Oregon, and the fire initiated in an electrical bathroom fan that burned. Your client just happened to have a half-pound fan installed in their building and had a short. It burned a $2.50 minus $3 million growth facility completely to the ground. So that's on the liability side. More often than not, we receive this trip and call, or maybe some sort of assault and battery claim around a security guard who's been getting out of the gate from a facility, or something. That's probably the more common liability. We're not seeing a lot of liability claims right now. There's just kind of a replay environment that never, and that really is probably the biggest telecom in the room. That's the thing that should be scaring cannabis businesses, is that long-tail liability of I'm selling a product that could potentially get somebody sick and may not have met us for a few years down the road. And then the claims expense associated with trying to fight and research those types of claims. Anytime you're dealing with a health-related claim, you're bringing in medical experts. And the real challenges is these cannabis businesses by and large are not buying enough insurance in that liability area. I can tell you, to a business owner, they do not buy enough. I've seen $10 million cannabis operations, guys that are holding more than $1 billion in annual sales, and they're buying $10 million in liability. You have one large claim event, and it goes to a product that had a defect in it, had some pesticide or some sort of product defect that were not the fault of the dispensary operator at all, and products were redistributed. But you've now been told in the claim that 10 to 15 to 20 people got sick. Do you think $10 million limit was enough? Probably not.
What does cannabis insurance look like if there's no recreation carved out and it's only medical? Is it then, there's still going to be a couple of facilities out there doing it, but the market is going to dry up drastically. So what does it look like, and what's the impact on that?
You're probably looking more at, it moving more into a health and wellness type model. Right now already, I would use cannabis as a new nutritional market in the internal world. And so it's when you think about cannabis, potentially smoking it for personal enjoyment. But in a medical situation, you're taking it for epilepsy of a particular condition. And similar to some of these other non-FDA approved ingredients that are out there, people take whatever it happens to be to help them with their fibromyalgia or whatever it is. So it's a non-approved product. If we go to the Fed's head, I think we could see more insurance barriers, kind of normalizing that coverage for new to the product. Frankly, you probably need to get all insurance agencies and MTAS to get out of this phase, because we're going to be in a market form that's not a lot of recreational space. We have Pfizer and a large pharma company going at it.
Yeah, that's interesting. I'm curious though. In the meantime, if that's going to just generate more revenue for those that are able to make the transition. From your experience, Ken, is that even, we have GMP, we have ISO, all these certifications at the federal level. In Washington state, we had 1,500 grows. I think only 3 dozen have never been popped for a violation. Do you think it's even feasible that the individuals could make that transition successfully, knowing that it's even more regulated than it is now?
I think that's a tough lead. I think you're seeing the difficulties of the cannabis road for this small to mid-sized business play out all across the rest of the leg of the market right now. If you look at the motor market in Washington, Oregon, Colorado, even California, 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 so that's a tougher mark on now. Now, I'm looking at a lot of Oregon, Colorado, and our small dimensions are fairly low on FDR at all.
Yeah, exactly. So what are some of the challenges right now that companies are seeing? Um, and do you think like rescheduling will alleviate any of that?
Yeah, I do. If we can get rid of 280 or we can get it rescheduled and get rid of 280, they have to pay for Banking Act, have some form of a clear path out of prohibition so that financial institutions are not worried about getting hit with the RICO hand. That's ultimately what this is. It's these bank financial institutions, which that's what an insurance company is, financial institutions. You're leveraging your premium against your investment portfolio. It happens to offset your risk on the back end side. Very simple time value. Money equations with, meter with risk management. Go. Yeah, you're gonna see progress, but where is that progress? So get rid of the small guys are starting to engage more. They're gonna be able to leverage their interference carriers who look at cannabis. Famous thing is they do the rub of their business once we get rid of the little pedal dish. Until we get to that point, we're struggling under 1 yard now. Like I'm finished with his rest charge. I can't outmatch him. I can't touch him. I can't get him to untouch. I can't do that. Frankly, double touch, so I just try to drive right off. I have to know my top-down mismatch. A lot of the complications that have been out of it. Once we charge, they're clear to come out of it. That's a tough one. It's probably no different than any other business planning. That you're looking at. It's hard to know what the plan for it is before you know what the other side is going to look like. In the meantime, I guess my advice to you is to try to run your business as profitably as you can and don't bank on the fact that there's necessarily a 24-month or a 36-month windfall out there that's going to go away and you're going to get a windfall. There's no way in the universe of how you do business. You make the most of your opportunity.
All right. So some takeaways then, based on your experience, all of the things that you've seen, what advice would you have to give to some cannabis businesses and help them prepare for changes that might occur as a result of cannabis being rescheduled?
That's a tough one. It's probably no different than any other business planning. That you're looking at. It's hard to know what the plan for it is before you know what the other side is going to look like. In the meantime, I guess my advice to you is to try to run your business as profitably as you can and don't bank on the fact that there's necessarily a 24-month or a 36-month windfall out there that's going to go away and you're going to get a windfall. There's no way in the universe of how you do business. You make the most of your opportunity.
Well, it's a great transition to look into a crystal ball and ask what you see in the future. so, so like I do all the time, I want you to look into that crystal ball and tell me what you see. How do you see the cannabis industry just kind of playing out? Maybe the growth or success of the industry. I'm sure we're going to see more fail with that rescheduling just because the stakes get higher. But where do you see? No one's holding their breath for that to happen. What's your crystal ball prediction?
I think we've got more of the same for a couple of years. Probably another year or you at a minimum. I do not see titanic change necessarily taking place between now and the end of the next election. I personally just don't. I don't know. I'm not in the head believing we got too long. I think it's more of aim. And I don't know that that's necessarily a bad thing because I think it's a good thing. It's going to allow more markets to figure out, and by markets I mean a state regulatory authority, more states to figure out where they're at on cannabis and continue to evolve this conversation. New York and New Jersey are on the line and the cannabis market has hit some critical mass. That's a meaningful prize and conversation that's going to have an impact on the national narrative of the Carvalho Retreat Canada. What does Skid Row look like? I'm still hopeful and want to believe, that the states are going to have a backbone and a leverage through their senators and their congressmen to not choose something that is completely a vicarage in front of them. As long as we still have the right to make cannabis in some of the forms, I think there's still a culture and an industry here to support. I guess that's part of what I enjoy in what I do. I mean, the cannabis community is a pretty magical group of people. I mean, they're creative, and the history of folks. You know, the history of the mid-partition people in California and the organization there around the AIDS movement and around the country. There's a tremendous amount of compassion within this community.
I know. Yeah, I hope I'm wrong, but I see a consolidation of 97.5% within the next 5 years, all being transferred to big pharma. I hope I'm wrong. But Norm, where can people find you at? Where are you at if people want to get to know more about the wholesale insurance or get a hold of you over at Amwins?
Yeah, you can shoot me an email. It's normative, mormn.1to5es@amwins.com.
All right, with that, I think we have to roll this one up. So I want to thank my guest, Norm Ives, cannabis wholesale insurance broker with Amwins. Norm, thanks again for being on the Talking Hedge.
Thanks, Josh.
Appreciate it. I'm Josh Kincaid. This is the Talking Hedge. Don't forget to like, share, and subscribe, or don't, and I'm out. Don't forget to smash that like button on your way out and check out these other videos that we've got.